Good evening, everyone. This is John Locke, and welcome to the Locking Your Success Trade and Market Update for November 17th, 2013. Before we get going, we'd like to remind you that this presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, any trades and or results covered in the presentation may or may not be live trades. In the event they are computer simulated trades, we do the best we possibly can to make sure they're as accurately represented as possible, and also that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. If you happen to be watching this on YouTube or SMB's site, please come on over, visit our trading blog at lockingyoursuccess.com and join our mailing list. Before we get going, we would like to just talk about the webinar we're going to be doing shortly. We were planning on switching this over to the webinar format this month. However, the website has been delayed a little bit. I'm hoping it's going to be out in the next couple of weeks. So as soon as we get this website up, and you'll notice it when you come to my website that it will be different. So from that point on, we will be doing these at a 9 a.m. webinar on Monday morning. Okay, let's take a look at the markets. And here we have the Russell 2000. Last week was expiration week. We closed expiration week at about 11:16. I had been calling, I believe, somewhere between 11:15 and 11:20 for expiration and hit that right on the nose again. Seventh month in a row have been really close. Again, I wouldn't expect that every month. Sometimes we're way off, but the market's just been very predictable this year. And it's been very good for our M21 or planned trades, which we haven't seen, but we may be going over some of those as time goes on. So we closed right where we were expected to do. Where I think we're going to go from here is I don't believe we're going to hold the pattern where we just break out and go up like crazy yet. What I'm thinking is that the market's going to probably come up, maybe match these highs, come back down to some sort of a support level, either this diagonal or the horizontal, and then take off hard into the end of the year. So right now I don't think there's a catalyst to go a whole lot higher. We have the SPX, if you take a look at that. The Russell's not overextended, but the SPX has been climbing pretty good here on a not a really strong pace, but it's been climbing along. And I'm thinking this is going to be a little bit overextended to really pull the Russell up into a really hard run up. So this may continue to drift up a little bit more. That may pull the Russell up a little bit more. But at that point here, is this really going to have the power to pull the markets extremely higher? I'm thinking probably not until it resets. So I'm thinking we're going to come up here, tend to roll this thing down, test a support level, either this diagonal or even possibly coming down to some sort of a horizontal, and then push up hard into the close of the month. Now, if you look at this one, we called the Russell right on last month. The SPX, I was way off. I thought the SPX was going to roll over and come down into here for the end of the month. That didn't happen. The SPX held up. So we can get rid of this. The month before that, we were calling the SPX pretty good too. But see, we're getting differences in the market now, which is kind of interesting. So let's just delete this. Coming into this month, I do believe we're going to be up here. We'll see how close we are. And as far as the Dow goes, this is a fresh breakout, and the markets were overextended, but being a fresh breakout, you'd expect the market to be stronger and can pull higher relatively fast. Again, I don't think that's going to happen. We may grind higher a little bit, come back down. I think we're going to break this level again. I don't think this is going to hold. We'll probably pull down into here somewhere and close the month about where we are. The target for last month was way off again, like it was with the SPX. We missed that by quite a bit. So let's just delete this. Delete 2 months ago, and we'll go over to the NASDAQ. Again, I was off in the NASDAQ. I expected everything to be weak like the Russell, or if the Russell was going to be weak, that everything would be dragged down by it, but it really wasn't. So everything remained stronger than I thought. If we look at the where I think we're going this month here, I think this is an important level. This is back from the 2000 tech crash, and it's the bottom of the consolidation that was the topping pattern for that. So this possibly could act as some sort of a resistance area. I'm thinking it probably will, and I mean we may exceed this level by a little bit, but generally this range I would expect us to turn around before we bounce and try and set all-time highs on the NASDAQ. So that would mean we run back, break this trend line, come back into here, and maybe close out here. Actually, I'm thinking this might be a little higher. So let's pull this up to around here. And we shall see how that goes. So that's what I'm thinking for the markets for the month. And for the week ahead, generally we might go a little bit higher, but I think we're going to be pulling back. All right, let's take a look at what happened with our positions. I'm just going to go to the, because we have so much that happened in expiration week, I'm just going to go to the closing positions for the month. The only trade that really got any adjustments here was the M3 web trade. So I'll just show the T-log for that, and I'll just show you how the other ones closed out because everything else expired except for the Bearish Butterfly, which we pulled off earlier for about a 10.2% gain or something like that. So let's just go into our most complicated trade first, which is going to be the November Web M3 trade. So coming into the week, we looked at something like this with our trade. We had our butterflies on down here. And this month we were doing butterflies with call vertical spreads because a lot of people do them that way. We had 10, 1060 butterflies. We had one 1020 call, and we had this 1060, 1100 vertical spread. So we're really widened out here. Stretch to the upside because we had to roll back for that 20-point pullback near expiration. And at the end of this day, what I decided to do instead of rolling the whole butterflies up, because we kind of needed an adjustment by the end of the day. Our negative delta was too high. We were pushing right at the edge of the tent here. We're coming into expiration, so I kind of want to stay under the tent. So what I end up doing is just taking this whole side of the butterfly and rolling it forward. I took these up 20 points. I took 1060s, 10 of the 1060s to 1080, and I took these 1110s up to 1130. And then we rolled up our vertical spreads in here. So at the end of the day, we look like this, where we corrected our delta down to about minus 50. You can see our split strike butterfly now. I'm still at the same width wings for the people who that would create a margin problem for. That's why we're just doing this a little bit more traditional this month. And then you see we rolled our 1060 calls up to 1080. We rolled our shorts up to 1110 and 1120. And I think later in the month, in the 13th, we made another adjustment, which was just widening this out some. So if we come to the 13th, see we have our 10 shorts up here. I believe I also pulled the call that day, and I put us in something like this. Now our delta is a little bit higher than normal for an M3. We're basically in a regular condor at this point, and or at least synthetically we are. And my delta is a little bit high, but I'm not so concerned about it because my theta is so darn high. We're 2 days from expiration. Basically, we're just going overnight. So I wanted to widen our target out, and this is the way I went into overnight. And we're not completely whacked out with our delta, but you see our theta is so high. And we did have a little bit of distance here between here, like 15 points between here and our short strike. So I felt that this was a good position to go overnight in. And of course, if you go to the end of the day on Thursday, we basically look like this. I decided to just let it go, thinking that we're probably not going to get much more than a 10-point gap. Of course, that's a little bit risky because we are close, but I felt comfortable doing that. I didn't want to try and trade out of this. I still had some money left in it, so we went ahead and just did that and expired it at, let's see what this came out to here. According to our reports, at a 22.36 profit, which is a little under 5%, 4 point something, and not a great return for this trade. But again, this has been a difficult year, And the M3 in general is designed to break even in these really, really strong uptrends, and it's been doing better than that. So it's doing better than it should in the environment that we're in. However, we're not in a particularly good environment for this particular trade. So that is the M3. As far as the ROCK trade goes, this trade required no adjustments and just simply expired. If we take a look at this, this is what we had here coming into expiration. I just went ahead and let it go. And if we shoot into our V condor, again, no adjustments here. We just came into expiration and let it go. We were still far enough from my short strike. I wasn't too concerned about it. And we let this thing expire at $30-something hundred. We'll go over that in the results in a minute. And that, I believe, is all the November trades because the Bearish Butterfly was closed earlier. As far as our December trades, we had no adjustments on the Bearish Butterfly. This is sitting here at a $3,200 profit, and it's looking fine with no adjustments. We did not enter a ROCK trade yet for December. I did enter I have a V trade, V condor for December, which I did make a small adjustment to. What we did is we rolled these calls from at the money. We rolled them away from the money, so straddle into a strangle. The position currently looks like this. You can see where we widened the condor out. And we're doing okay. We're up some money. The market just hasn't moved, so we're just kind of bumping our expiration line. So we're getting some extra theta in here. And let me just show the T-log. This here was the adjustment that we did, rolling those calls out, call and put, rolling the straddle out. And let's see, what else do we have? We have an entry of a December Web M3. I'll show you the entry setup for that on Friday. And again, we're doing the more traditional version here where we do straight butterflies at 1080. We're actually 35 points below the money. And I did that because I wanted to get a nice flat T+0 line. And this is what it took to do it. So that happens. I'm about 35 points behind. I added 20-point vertical spreads at 1080, 1100. Added one 1070 call, and it puts us about flat delta. And then this position here. So T+0 line is pretty good. Theta is pretty good. And we have a little bit of downside protection, not as much as I'd like. But that's kind of the setup with the market skews for this month. That's probably the best that we could do without being directional one way or the other. Let's take a look at our January V condor, and I believe that's all the trade we have on. So it's 2014. It's coming up. Here we are. I went with the 10 delta shorts, 30-point wings as usual. Straddle is it's about 10 points under the money, actually 5 here in this case. So I got the straddle here at 1110. And we have our shorts up here. I did the 9.79 delta because I didn't want to do a 13. And 30-point wings there. Here is what the position looks like coming into the weekend. So that is all the trades that we have on. Let's take a look quickly at how we're doing for the year with the trades. Here's what we have for results. And first thing I'd like to take a look at is a bearish butterfly. One of the things you got to remember is it is a bearish butterfly. It works very, very well. This is the worst year I've ever seen for this particular trade, but it's also the most I've ever seen the Russell go up as well. So if you're looking from mid-November, if you look at our charts from mid-November, we went from around 750 to around 1120, which is over a 45% increase in the last 12 months. That is huge. The only other time you've seen that is like a capitulation off the bottom of 2008. or actually it was in 2009, we had the capitulation and the market took off like that. Percentage-wise, the gain was the same, but point-wise, this gain is actually much, much bigger than it was even back then. So this point gain is incredibly strong. And not only that, we had poor market timing. So that being the case, trading a trade that leans inherently a little bit bearish, it's been challenging. It's been a challenging year for that. Despite that, we're only down about 15% after 11 months. And one of the really interesting things is, even trading this completely by guidelines, I had a few months where I chose to take maximum loss, even though the trade really could have gone either way. Like this month here, we pulled a 31% loss. However, if you're looking at the position, it touched the maximum loss for about a half an hour, and then it backed back. And if this was a positive month here, we'd be solidly positive for the year. And I believe there were a couple other months too where we kind of let it lose, and I purposely we knew the market timing was bad, but we purposely went in and we purposely adjusted anyway. We talked about that as we were going along. So certainly a winnable year. I actually had a lot of students who actually did pretty well with the Bearish Butterfly this year. But if you're going straight guidelines without any kind of consideration for market conditions, it's a tough year for you. I mean, you should be reasonably flat for the year, assuming December pans out all right. If not, it should be a little bit down. The M3 trade is a trade that's inherently designed to break even when the market runs away to the upside on you. So when the market comes in and it just runs up hard into expiration, it's made to break even. Break even year for this would be normal. And I've been pretty much staying within the guidelines. I mean, playing around, showing some different variations of how you can adjust it, but Delta guidelines, we've been within the guidelines the whole time. And we're running at about 10.3% profit here on the year, which is actually the worst year I've ever seen for this particular trade as well. But again, it's doing what it's designed to do. The Bearish Butterfly is doing what it's designed to do. It's a volatile market trade that does very well in downtrending markets, sideways markets, and we have extreme up market. This is normal. M3, same thing. It's designed a little bit more towards the volatile end of things. It's a protectionist trade. It will do very well if the market's neutral, but with really harsh moves, it's designed kind of to break even or not lose a whole lot of money. That's what we've been doing. We've been pretty flat most of the year. So this is acting as designed. ROCK trade, well, these two were doing worse than expected this year because of the market conditions. The ROCK trade is doing better than expected this year because of the market conditions. Tends to do well in grinding up markets, and there's a lot of subjectivity in this trade, but the way I've been trading it here, we've been pretty much positive all year, near break even in October, but the rest of the year has been pretty good. So this is performing more normally than the other ones. This trade here, if you're in extremely volatile conditions, can have trouble. Usually you're in an M3 position using the ROCK system in extremely volatile markets, and you'll get M3 type of results, which in that type of market is going to be very, very good. In this type of a market, the ROCK trade takes advantages of the disadvantages of the M3 later on in the trade, and takes advantage of that. And this is what we got. Really, really good results for this year. And as far as the V trade goes, this trade does well in sideways markets. It does well in grinding up markets. It does pretty well in fast up grinding markets. It's designed to be a low yield trade, which it is. I've never had this outperform a Bearish Butterfly in M3, just so you know, in history. In the last, let's see, we've been doing this for 5 years. I've never seen a V trade outperform a Bearish Butterfly. I've never seen a V trade outperform an M3. So I wouldn't expect that every year. However, this year, the grinding up market conditions are fairly favorable for this. It's been doing very, very well. No losses. As of yet, we'll see how December goes, but we may have a full win for the V trade, a full set of wins for the ROCK trade. And this performed better than usual. We're looking at a 68.7%. One of the things you have to realize with a V trade is you are spread out over 2 months, which means if you're really using $100,000, this is really closer to a 34% gain. Still outperformed Bearish Butterfly and M3 this year, which is very, very unusual. But overall, we are doing well for the year. Not spectacular, but well, like I said, because we have the very difficult market conditions for market neutral trading. But on our planned capital trades, we would expect to be up 95% of planned capital for the year. We're only up about 58%. We have another month, but realistically, we might get another 30% out of that. We might get maybe to 80% if we have a good month. We probably won't get much higher, so we're probably going to be under expectations for this year. First time in a long time I've been under expectations. Usually we're over expectations. And since we're only technically for planned capital using 50% of our account, we are up, we wanted to be up 48% for the year. We're up about 29%. And like I said, if we get another 30% here, we'll get 15% here. And we could be up in the mid-30s if we have a good month. If not, then we will probably be in the mid-20. But everything is going well, a little less than expected, but we have those years when the market's just acting up like this. So that is all I have for tonight. I hope everybody has an awesome week, and we'll talk to you next week. Thank you and good night.